Good morning, guys, and I hope that you're well. So, this morning, following on from price, it's quite boring at the start, to be fair, because there was this somewhat impulsive move. Normally, I tend to avoid looking, but this was too early on into Frankfurt. I doubt that this was the move of the session, but I guess that's a little bit of discretion, but for me, that was just a start. I literally just got on the chart and I just saw this, so I was happy to continue anyway. So following on from this, obviously what we have, let's go from range to range, and let's go from there. So the first thing I noticed is that we had this breaker structure, which created this new high from this new low. Then we had this new low being formed from this high. Price. This would have been a perfect disruption, right? But price didn't bother to come back to the extreme. In fact, it just reacted to the whole up move of that. I think it was the 1 minute. Yeah, the M1 up move. Which, to be fair, I don't use that. I don't use that concept. I think it makes the POI too big. So I just look at where price is at the minute. I do think it makes the POI too big for me. I don't really like that. So yeah. Now, rather than last time, I'll get rid of all of them as I go. The next thing we have is we obviously create this new high, right, from this low, and then we have a breaker structure, new low. Sorry, that's not the new low. The new low is here, high, and then we have a new low, which is here, and then we have a high. Low. So in terms of disruption, there's not really a lot going on, which is what I was talking about in terms of frequency. It doesn't always happen, but what we do have here is that we do have this breaker structure, the low. I thought this was going to be a disruption here, but in fact there was a high here which caused this breakdown. But the thing is, this candle was also his high and low, so it caused a disruption and took this price out, and then took out the high. So now we have a disruption leg. We need to see which direction it's going to go in. So obviously, if it went on to be fair, I should have looked if there was a long there. I didn't think about that. Let me have a look actually, seeing as I'm here. There wasn't anyway. Okay, that's fine. Otherwise, that would have been a valid loss if there was one there. If there was a trade, yeah, but I didn't see that live at all until now. So obviously we have this leg here, which is now eventually been broken. So we have this POI, and then we do also have the two rules, because we have this candle which creates its own low, high and low here, which makes it even better, because now we have the two rules confirmed to be bearish. Again, let me get rid of all of these. Otherwise, it's gonna look too messy. Oops. That's it. Okay. So once price actually tapped in, this is when we look for our disruption on the lower time frame. So what we do have is the first tap in. We have our structural low, which is broken, creating this new low. But obviously, we need to have a disruption, and to be fair, that's the high there. Disruption happened after that, and then this is when we start looking for our entry. So any point we get an entry point, we look to enter, right? That doesn't make, it does make sense, but it sounded stupid, so I apologize. So what we have is, obviously we've got the high there, we've got the low. This is quite interesting because price wasn't exactly doing it much until we have this candle, its own high low candle. So that obviously created its own high low, as that's what it's called. And then obviously we have the first leg, so we have rule number 1, and then rule number 2 takes forever. I did have an entry point here, but it didn't get there. And then this is when we broke, and then my entry point was here. I had enough time to put a sell limit there, which I did, and this triggered, it triggered a little bit lower. It triggered at 7.6 rather than 7.7. I assume that's because the spread triggered a bit early, which is a little bit scary, because with a 0.5 stop loss and with how the Vantage spread has been, it's a good spread, but it just fluctuates a little bit. So that was slightly risky. But even if it hit my stop loss, I think I would have did a manual execution. I'm not sure if I would have. Actually, I probably would have, but I'm not sure. That's not happened to me in a while. Anyway, once I'm in, obviously my first target is to look for that 10 pip move, because then I'm secured and done for the day. So 10 pips was pretty quick, to be fair. 10 pips is here. So let it go hit. So 10 pips took what? Yeah, it took about 4 minutes to hit 20R. Then I took my partial, and now I'm just holding the rest. So again, in terms of the higher time frame, same as yesterday. This is when I need to look for my target points. Price is still moving. Okay, so let's go to the hourly now. I think I can still use. Oh, actually no, price has gone bullish. Oh, has it? Okay, we're still stuck in this leg, and I'm still aiming to take out this low. That's the only thing I can say from a higher time perspective. I'm not too fussed. Obviously, once I've taken partials, I don't really care, because I don't. You know, in terms of swings, I let them happen when they happen. I'm not really trying to force the position, because at the end of the day, I'm only trying to catch the impulse of whatever session I'm trading, which is obviously this morning session. But now that London's open, let's see how price reacts. Hopefully, it continues down. But I can aim to still take out this low. That's going to give me a higher risk reward there. Yeah, that one. But let's see what price does. We just had to follow. I mean, I've taken partials. I'm happy. I'm done for the day. So just to recap, right? So because I think some of you skip the breakdowns and then forget like what's actually been taught. So the main thing about the disruption model, again, what we're looking for is some sort of disruption to happen, and then this is going to be our decisional length of whether it's going to go bullish or bearish until it confirms. Until it confirms, that's when we know what we're going to do. And essentially, once we have that POI confirmed, we're going to do the exact same thing again. It's as simple as that, and obviously we're going to look to enter on this one or the SR, whichever one it is. So it can either disrupt at the IM or the SR. It doesn't really matter. It doesn't make a difference. Whatever is disrupted, it's fine. Sometimes what you may see, and what I've seen when I was backtesting, is that sometimes you get a disruption of the SR, you get an entry, and then you get another disruption, but it hasn't violated the POI. You can still look to enter. It still works. But I'm so impressed with the win rate on this, and this is another good example of the fact that for the last 2 weeks there's been nothing, and for the last 2 days there's been last 2 days. Did I not trade Monday? Did I trade Monday? No, I didn't. Oh, did I? No, I did. There was nothing. This is a good example showing you that you just have to wait for your edge, but it does eventually play out. You just have to wait for price to come to you. It's far, as I said, it's far more relaxed. There is one thing I should probably mention, is because this I didn't pay attention to at the time, because it was, to be fair, it was quite fine. When I did flick across, all I saw was a wick, but it's actually closed at the body, so it did somewhat violate that structural point. So this trade was taken on a slightly more higher risk, purely because it's taken out the structure itself. So it's caused another disruption on its own. But I was flicking between the 1 second and the obviously 15 second, and at the time it looked like just a wick to me when I flicked across, because obviously I had them side by side, but obviously it was a body close. But there's nothing I can do about that. If I lost, looking back at it, it will make sense why I lost. So I would say I was somewhat fortunate on this one. But it's just something to take account to in terms of understanding your risk, because even when I was doing the inception model, I was still happy to take when price like flicked out a little bit. As long as it presented the entry, I was still happy to take it. But again, it's just knowing that it's high risk when you're doing it. So what's price floating at now? Yeah, about 36. Okay. Anyway, I hope you're finding these breakdowns useful. This testing phase is obviously going really well, and again, it's good to see some of the results from your testing as well. I know there's a few of you sharing your results with me, and actually trying new things as well with this model. But yeah, obviously we'll see how September goes. It's obviously looking like a good or at end of August, which is very rare, very odd, but it is what it is. As always, trade safe, and I'll see you in the next breakdown.